Hey everyone, in this video I'm going to answer which one I think is the better growth stock to buy, and I'm going to compare three growth stocks here: Amazon, Shopify, and Etsy, and answer which one is the better one out of these three to buy today. So I'm going to compare these three on some critical financial metrics including revenue, profitability, cash flow, and valuation. And I'm also going to look at the total addressable market for e-commerce to then finally come up with the conclusion of which one I think is the better buy today. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so these three companies are growing nicely over the last decade, with volatility, of course, surrounding the pandemic era lockdowns. You can see revenue growth spiked for all three and then came back down. Although the one that's maintained very nice revenue growth is Shopify at 23.57% in the latest quarter. Amazon comes in next at 13.91%, and finally Etsy at the lowest growth rate of 4.35%. But let's take a look at the total addressable market for e-commerce. According to Statista, the total e-commerce spending in the United States came in at over $1 trillion in 2022. That figure is estimated to grow to nearly 1.5 trillion by 2027. Surprisingly, in 2022, when total spending was over $1 trillion, it represented just 14.6% of total sales. Total retail sales surpassed 7 trillion in 2022. Of course, e-commerce is more convenient than shopping in person. It's understandable that the industry will grow to a larger share of overall spending in the next several years. In fact, the industry will likely continue to expand beyond 2027. Don't get me wrong, e-commerce sales will never be 100% of the total, but it wouldn't surprise me if it grew to be larger than 50% by 2040. Now, several companies will benefit from this trend, like Amazon, Shopify, Etsy, and eBay, to name a few. Even financial transaction facilitators like Visa, MasterCard, and PayPal will capitalize from a greater percentage of shopping happening in forms where cash payments are not an option. All right, so now that you've seen the size of this market, you can see the potential for growth for several years to come. Now, out of these three, the one that is expected to grow the fastest is Shopify. Although when you compare the size and the growth, Amazon is growing more, right? Because it's a bigger company. And so 10% growth for Amazon is like 50 billion a year in growth. So the size of growth is more for Amazon, while the rate of growth will be more for Shopify. And Etsy is likely to remain in third place, as the company's growth rate has really slowed of late and the company's restructuring, trying to find growth in other areas. Now, the next thing I wanted to look at is the operating profit margin, and Etsy takes the lead here at 12.66% as the most asset-light business model of the three. Remember, Etsy doesn't deal with shipping and handling and logistics the way Amazon does, and Shopify is still divesting away from that logistics business it spent billions of dollars investing in. One of the bigger mistakes management made, in my opinion, and I noted that right when management made that opinion, I downgraded Shopify stock. I had it rated as a buy a couple of years ago, but right when it made that investment, the billions of dollars in shipping and handling, I downgraded Shopify stock, and it turns out that decision was indeed a mistake, and management is now trying to separate itself from that decision. Amazon, meanwhile, has done an excellent job growing into its investments. 6.41% operating profit margin for a company that generates roughly 600 billion in revenue is a lot of profit. Now, Shopify is recovering from those investments, although still negative 1.11%. You can see before the company made those investments in logistics, how nicely its profitability was growing over the years. You can understand why so many investors were enthusiastic about Shopify stock, including myself, before that blunder. The next thing I wanted to look at is cash flow from operations. And again, Etsy demonstrating how lucrative that asset-light business model is. 25.67% cash flow from operations to sales, followed by Amazon at 14.78% and Shopify in third place at 13.37%. I suspect Amazon will continue expanding their cash flow from operations to sales, while Etsy, I think, is going to be flat to down given the troubles they've had as of late. And Shopify will continue growing as it separates itself from that investment in its logistics and handling business. It'll take some time, but I think Shopify will recover from that as well. Finally, I wanted to compare these three on valuation, and I chose to use the price to earnings forward ratio. Here's why that metric is important. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have two stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. Okay, so now that you understand why this is one way to measure valuation, you can see Shopify is the most expensive at a forward PE of 56, followed by Amazon at a forward PE of 33, and finally Etsy is the cheapest of the bunch at a forward PE of 13. Now, if I had to pick one of these three stocks to buy today, it would be Amazon. Amazon would be my choice, followed by Etsy, and then Shopify would be third place. Importantly, I have Amazon stock rated as a buy. I also have Etsy stock rated as a buy, but I do not have Shopify stock rated as a buy. I have it rated as a hold, as the expensive valuation causes me hesitation. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.